How's it going, everyone? Matt Diamond with Kalshi, and today we're talking strategy. We're going to be talking about a very specific indicator that's really popular among the trading and investing community, and we're going to be focused on the 9 EMA, or the 9 exponential moving average, when it comes to the S&P 500 daily close, the NASDAQ 100 daily close, the S&P 500 weekly close, and the NASDAQ 100 weekly close. And this strategy works really well in a trending market. So when a market is going sideways, sometimes those shorter term moving averages can be harder to read, but when there is a clear direction, and especially to the upside, that's where this strategy can work really well. And for those that don't know, let's talk about what the exponential moving average is, because I'm sure that a lot of people have heard of a simple moving average. So those are two different types. As far as the exponential, it's a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as the exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average or an SMA does. Now let's talk about the actual strategy. So the chart that's in front of me right now, this is going to be the S&P 500. And if you look over the past little bit, it's been in a very strong uptrend. And this is when that EMA can work really well, because what happens is pullbacks to the EMA tend to get bought up in a trending market. So they can pull back, it can hold that short-term moving average, the 9 EMA, and then continuation of trend can happen. And then the pullback to the 9, it holds the 9 EMA and continuation of trend, and rinse and repeat. Now nothing is 100% because sometimes it comes back to the 9 EMA and it will pull back a little bit deeper than that. But even if it does, if it happens to reclaim it and then hold that area, that can be a good risk reward spot as far as continuation of short-term trend, and then rinse and repeat. So holds the 9 EMA, continues to push higher, pulls back to it, holds that 9, eventually reclaims it because it's not perfect, gets back above it, has a nice push to the upside. And then as you can see, even these mini pullbacks here, pulling back to it, remaining above it, continues to hold up strong in an uptrending market, and then has continuation to the upside. There's no such thing as an indicator that works 100% of the time, but you can see, keeping this very simple, that if you have a 9 exponential on the chart, usually in a trending market to the upside, when it pulls back to it, it tends to hold that short-term moving average and then continue to the upside. Now, as far as the S&P 500 daily close, when it comes to the strategy, here's how I see it possibly playing out in my mind. When these pullbacks to the 9 EMA happen, and there's the belief that from that 9 EMA, it's going to hold that area of support and continue to the upside, this is how I would think about playing it. Going into these contracts, the yes or no shares, and if I expect a bounce from that 9 EMA because we've had a pullback, I'm going to want to trade yes on the shares that are in the upper zones of these, because if it does bounce, then the likelihood of it closing in those upper zones could possibly be a higher probability. And then vice versa. So if we have a pullback to the 9 EMA, we continue to hold that 9 EMA, and I believe that there's going to be a bounce to the upside, then I would want to trade the no shares, because I believe that price is going to go higher, and it's not likely that it's going to get to these lower zones and close in those areas. So the really cool thing about trading the yes or no shares is there are a couple different ways to structure it. Even if you believe that the market is going to go to the upside, you don't only have to trade the yes shares to the upside, but you can also trade the no shares to the downside because you don't believe it's going to go lower. So that was the S&P 500 daily. Now let's go look at the weekly. And remember, this orange moving average, this is the 9 EMA. So we're looking at pullbacks to the 9, and if it holds that 9, then maybe it could continue that uptrend. And here's a couple examples. Holds the 9 EMA right here, and these are weekly candles. Each one of these candlesticks is going to represent a week of price action. And as you can see, it holds the 9, has pushes off of it, and small pullbacks that continue to hold above the 9 EMA. The uptrend continues. Now, being that this is a very strong uptrend on the weekly, they're rarely coming back down to the 9 EMA, but it's continuing to hold it the entire way up. So each one of these pullbacks continues to get bought back up, and the uptrend remains intact. So now let's go look at the S&P 500 weekly close, and we'll look at the yes and the no shares. And similar to the daily example, this is how we're going to structure it. So if on the weekly it pulls back and it holds that 9 EMA, and I believe it's going to continue the uptrend and bounce off that 9, then what I would want to do is trade the yes shares on some of those higher zones, because if it does bounce, there is the likely probability that it could close in those upper zones. And then vice versa, like the example before on the daily. If it pulls back on the weekly and it holds that 9 EMA, then that means that I don't believe price is going to go lower. So I'm going to want to trade the no shares to the downside because if it happens to bounce, it's not going to get to these lower zones. So we talked about the S&P 500 daily, the S&P 500 weekly. Now let's go talk about the NASDAQ 100 daily. So similar to the S&P, looking at this orange line, this is the 9 exponential moving average. And a lot of times when it pulls back to it and it holds it, it continues its uptrend. Even if it's for a short-term move higher, as long as it's holding that 9 EMA, here's a few examples that I'm highlighting. If it can hold that 9, has a nice move higher, or even if it reclaims it and ends up getting back above it, it can hold it, have a nice move higher as well. But as long as it continues to hold it, it can have a strong push to the upside in an uptrending market. Now we go into the back end of Kalshi. We search the NASDAQ 100 daily close, and we're looking at the yes or no shares. And similar to the S&P 500 daily and weekly, this is how we're going to structure it. So if every single time it pulls back to the 9 EMA, I believe that it's going to hold and there is a potential bounce, then some of the things that I would want to trade would be the yes shares to the upside, because if it has that bounce, there is a high probability that it'll close in those upper ranges. And then vice versa, because there's a couple different ways to structure this trade. If it pulls back to that 9 and it holds it, and I'm expecting a continuation of the uptrend, then I can trade no on the shares of the zones lower, because if it does have that bounce, it's not going to get to those lower prices. So that was the NASDAQ 100 daily. Now let's look at the weekly. So as you can see, this orange line, this is the 9 exponential moving average. These are weekly candlesticks. So each candlestick is representing 1 week of price action. And each time it's pulled back to the 9 EMA, it usually holds. Holds the 9, has a push. Even if it pulls back a little bit and remains above it, there is continuation of the uptrend. And as this continues to go higher, and it holds that 9 EMA, there is usually a bounce off of it because it's very strong and it's trending to the upside. Now we go into the back end of Kalshi. We look at the NASDAQ 100 weekly close, and similar to the examples before, this is how we structure it. So if that 9 EMA continues to stay intact and there are pullbacks to the 9, and we believe that there is going to be a push back to the upside off of it, then what I would want to do is trade the yes shares, because if it does have that bounce off the 9, there's the likely chance that it'll close in these upper ranges. And then vice versa. If it pulls back to the 9 and it holds the 9, then I'm going to want to trade the no shares on those downside ranges, because if it does have that bounce, it's not going to trade lower and get to these prices. So when using the 9 EMA on the S&P 500 daily and weekly and the NASDAQ 100 daily and weekly, there are numerous different ways in which you could take advantage of that trending market. So that's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.